Talks aimed at avoiding the so-called fiscal cliff will continue to cast a shadow over trading this week as markets begin to wind down for the Christmas-New Year's holidays. But traders will have some key economic data to serve as a possible distraction, including the latest reading on Canadian economic growth. And in the U.S., investors will look to see if the strong run-up in the U.S. housing starts carried on into November. Going over the cliff involves the automatic imposition of hundreds of billions of dollars in spending cuts and tax increases that could plunge the world's largest economy back into recession and depress economies around the world. The TSX ended last week higher despite concerns about whether U.S. politicians can head off the fiscal crisis. Mining stocks advanced on further signs of expanding Chinese manufacturing sector, and further lift was provided by Research in Motion, which continued to make strong gains on increasing optimism that the new BlackBerry 10 smartphones can turn the company around. The line is being launched at the end of January. On the economic front, expectations are fairly minimal for the October report on gross domestic product. Economists expect data will show GDP failing to grow for a third straight month. And negative news is expected from the Canadian housing sector. It is expected that existing home sales dropped 0.89% year over year during November. Sales have suffered in recent months since Ottawa tightened ownership requirements. In the U.S., economists expect that housing starts falter during November after October's reading left them up more than 40% on a year-over-year basis. From the Canadian Press, I'm Greg Bunnell.